Sit down, listen up. I'm about to give you the talk that I wish somebody had given me a year ago. We need to talk about Bitcoin. Because I myself, believe it or not, am a die-hard, orange-pilled Bitcoin enthusiast. Yes, I do believe that Bitcoin is a superior monetary system. I do believe that a world living on a Bitcoin standard would be a better world than a world living on the fiat standard. However, I am not just an orange-pilled Bitcoin lover and enthusiast, but I also am an investor. I also am an analyst, and I also am the guy responsible for managing the family portfolio and therefore am responsible for protecting the wealth and savings of my family and of the ones dear to my heart. Therefore, I also have the obligation and duty to hedge my portfolio, our portfolio, against not just different scenarios in the market, but also against my own bias, especially, shall I say, against my own bias, because my bias can be wrong, sure, and my bias usually tends to favor Bitcoin above anything else. But I am sure you are aware that this bias can be costly, not just for me, but also for you, if you hold those same biases. And since this message is so urgent and so dear to my heart, we will skip the intro altogether and jump directly into the charts here. What am I talking about then here? If you have followed this channel for some time, you are aware that for already 8 to 9 months, we have been calling for the Bitcoin top here in this topping area. And this is neither bragging nor a story on how great our analysis is, because we have also been wrong in the past. However, there's a particular point that I would like to emphasize here. So then just quickly in our dashboard, pulling up the analysis from, let's say, for example, May of last year, right? So in this case here, the 22nd of May of last year, you can see that already back then, we had called for a topping area of Bitcoin. And already back then, we had concluded that the wave 1 high has already been established back here in early 2025. And what we have seen so far was only a corrective A wave down and now an overshooting B wave. So only a corrective market top and no, not a new all-time high with substantial follow-through. And we had already back then called for a market top between 117,500 on the lower boundary, 122,600 as the optimum target, and the upper boundary at $130,000 for Bitcoin. And already back then, we had concluded that the following wave C, to finalize this wave A leg down, should come to a halt in the area between 62,395 on the upper boundary and 51,300 on the lower boundary. So keep in mind, 62,395. This was our call back in May of 2025. And the rest is history, right? So we saw this topping pattern here, and now we saw a perfect hit of our target zone, but I do not want to brag here. So that's where the embarrassing part starts. I, of course, have known this analysis, right? And of course, I have communicated this analysis with you here on this channel in numerous videos. However, for my very own portfolio, I did not take any profits here inside of this target zone. So right now, I am completely, fully underwater, probably similar as many of you guys. And let me just get one thing out of the way. Up until a few days ago, I still heard voices in this space telling you guys that we are not yet in a Bitcoin bear market, but that we are only in a short-term correction within the still intact bull market. And what can I tell you? Let me just quickly pull in here the 50-week moving average, which historically has been a support band in bull markets, right? We saw this here. We saw a reaction at the 50-week moving average. We saw a picture-perfect double hit here on the 50-week moving average. We saw just a little test with an undershoot back in April of 2025 of the 50-week moving average. And now in the recent past, in November of 2025, we saw the price action in Bitcoin dipping slightly below the 50-week moving average, then trying to reconquer it and retest it as support, which failed, and ever since we have just fallen through. So if you've listened to those voices that told you we are not in a bear market yet, get that out of your system. That is just factually untrue. And to even give you a better idea on how deep already we are inside this bear market, let me pull another moving average up. 200-week moving average. Sounds familiar? Yep. This average has been the historic bear market low, right? We're not talking about any bull market territory here whatsoever, the historic bear market low. So then what happened? What convinced me myself to not sell any of my Bitcoin here? It might have been the very same thing that also convinced you guys. The macro story of the Bitcoin 4-year cycle just didn't really fit. We were first of all too early to start the Bitcoin bull run. We were then too early to already have established the top. We did not yet see any new highs in Ethereum, and we did not see any altcoin rally, which of course everybody knows Bitcoin is the first mover, then Ethereum is the one to follow, and then comes the altcoins. That's the way it has always been. That's what everybody kept preaching. And yet this time it wasn't the case, and we are already deep inside a bear market. There's no doubting that. But of course there was more macro news, because back then we did not see any real hype in Bitcoin, right? There wasn't people left and right asking you about Bitcoin that never before had anything to do with investing money. We also did not see any spike in Google search volume, and we also, looking, for example, at the Bitcoin balances on exchanges here, we did not see any peak in Bitcoin balances on exchanges, because historically, when we saw Bitcoin, major Bitcoin tops in the market, we also saw Bitcoins moving on the exchanges to then, of course, be sold and liquidated. So all of those reasons then together were exactly what my Bitcoin biased heart wanted to see and wanted to believe at this very moment, back here in September, October of last year. I wanted to believe that, you know? I didn't want to believe this Elliott wave projection of the top already being in and now a correction to follow through. So an absolute mistake here on my end, and also a very costly one. I am down almost 50, top to bottom. I have been down 53% and currently still am down 44% on my Bitcoin position. And that hurts. Doesn't matter where exactly you went into Bitcoin, even if I'm still up from my average purchasing price, that still hurts. And even more important, it could have been avoided had I been more aware of my own bias here. But coming back to the story here of the Bitcoin balances on exchanges, this sadly, in my mind, can mean one of two things. First of all, of course, it could mean that the sell-off that we saw in Bitcoin was a pure mistake by the market. It could mean that the bottom already is in, and we will see a continuation of the bull market, because there is yet no selling pressure coming into the market. That's what that could mean, yeah. But it also could mean something completely different. It could also be a terrible sign, a harbinger of a terrible correction to follow through. Why is that? Imagine if right now, after a 50% correction already, we did not see any substantial inflows to the exchanges. Imagine what kind of a correction we will see to follow through if the time comes that we see those inflows to the exchanges. If in a time of decreasing Bitcoin balances on the exchanges we already see such an ugly correction, imagine what will happen if we see those inflows to the exchanges really coming in and really creating the sell-off pressure. But that's just a dubious speculation. But let me give you some more hard facts of what we can expect and what we should brace ourselves for. So coming over here to the 1-day chart instead of the 8-hour chart, and before I'm gonna tell you here about our target zone and why we decided to put it exactly where it is, let me show you the following. So we talked about the 50-week moving average, right? We talked about the 200-week moving average. There's another moving average that we should pay very close attention to. It's the 350-week moving average. And why is that? So we have seen the following pattern for Bitcoin in the past. So going back here all the way to the correction that we saw in 2018. If we take a closer look here at this bottoming area, you can see that in late 2018 we had the first touchdown here on our 200-week moving average. We had the second slight touchdown here on the 200-week moving average. And ever since, we were off to the races and off to new highs. So 2018, quick touch point, and we were off to the races. Then the next instance of us testing the 200-week moving average, that was in 2020. You might maybe call this a freak event because it was the COVID pandemic, and so something the world has rarely ever seen before, if ever. We saw, of course, a drop to the 200-week moving average, but this time we fell through. Sure, we managed to reconquer that line, but still we fell through and we dipped around 29-30% below the 200-week moving average. And what followed after? So the next correction that we saw in Bitcoin, of course, was after the 2021 highs. We saw the bottom in the market in November of 2022. And where exactly did we see the bottom in the market? We saw the bottom in the market for Bitcoin in November exactly at the 350-week moving average. So you could not have drawn it more perfectly. This was here the FTX crash, and we fell down almost to the 350-week moving average. Didn't touch it yet. And therefore we had to establish another lower low. And this is where we touched the 300-week moving average. And from there onward, off to the races, right? We never revisited it yet. So then, what if? Just some dubious speculation, how Ben Cowan would put it. What if in 2018, we tested the 200-week moving average, perfectly respected it, and it held the support. In 2020, we overshot it to the downside by 30%, but reconquered it and went off to the races. In 2022, we completely ignored the 200-week moving average, but we perfectly respected the 350-week moving average. What if, in the following months, we see a correction to the 350-week moving average, and same as in 2020 with the 200-week moving average, we will undercut the 350-week moving average by around 30%. What if? I'll tell you exactly what if. So again, based on our Elliott wave analysis here, we conclude that we will see a wave B relief rally in the not too distant future, but after we will not see substantially rising prices, but we will see a continuation of the sell-off in this blue wave 2. And we see the pivot point for this blue wave 2 in the area between roughly $38,000 on the upper boundary and $26,000 on the lower boundary. What would that mean then? So if we extrapolate, just a rough estimate, right? So if we extrapolate the 350-week moving average from here, that would probably mean that we are somewhere in this area here by the time we could potentially hit those lows. And that then would mean if we just from these levels at roughly 50,000 undercut by 30%, that would take us exactly inside our target zone. So absolute confluence there. And I do hope and pray that this will not happen, because as mentioned before, I'm a full-on orange-pilled Bitcoin enthusiast, but I do have this responsibility towards my family and towards the portfolio that I'm managing to keep a risk at a certain limit. Meaning, if we see this currently projected relief rally in the area of the high 90s for Bitcoin, I will be taking profits, because I don't see any gain in harvesting the praise of the Bitcoin church and rewarding myself a medal of diamond hands while my portfolio keeps declining and declining. And if right now you aren't concerned enough already, let me show you something else that we need to keep in mind for a reality check on our Bitcoin bias. So here I have pulled up the logarithmic chart for Bitcoin because it is just a better chart to visualize what I want to get to. So back in 2011, right, we saw a top to bottom correction at roughly 94%. The then next correction to follow, of course, was the correction after the 2013 Bitcoin high, and it was a correction from top to bottom at roughly 87%. The next one then to follow was the one that probably most of you already do remember from personal experience and not just from the history books. It was the correction after the 2017 Bitcoin high, and back here up until the lows we saw an 84% correction. So then the next correction in Bitcoin was the correction, of course, after the 2021 highs, and we saw a total drawdown of 77% in Bitcoin. And if I look at these measurements, I find it rather unlikely that after a 94% correction, an 87% correction followed, then in the next one an 84% correction followed, And in the most recent bull market, a 77 correction followed. And right now, we should already have found the bottom at a 52% correction. I doubt that. Seems pretty unlikely to me. To me, it would be more likely, it would be way more likely to find the bottom somewhere in the area of the low 70s, potentially even high 60s, but at least somewhere around the 70% mark, which again, oh wonder, you can see it here in perfect confluence with the upper limit of our target zone at $38,000. And even if we were to match the same depth of correction as in the last bull market, so roughly 76%, we would even be well inside our target zone, almost on the lower threshold already at $29,000. I mean, do you see where I'm getting at here, right? This is no crash prophecy or whatever. This is just extrapolation on historical data that every single one of us knows, right? We know these cycles, we know these corrections. This is no secret knowledge. It's just put very blankly and harshly because us Bitcoin believers do not want to face those truths, right? Because they're so uncomfortable. Especially if already we are down and did not sell the top like me. So if you continued watching up until this point in the video, please do me a favor and promise me that if we really see this relief rally coming into the high 90s, to please consider taking profits instead of going down all the way to the $40,000 mark or even below. And if you are not a subscriber to our daily market analysis service, I mean, that's up to you. If you look at our track record here of this hit of this entry zone, this hit of the entry zone, this hit of the entry target zone, and this hit, and of this perfect hit of the top zone, and in this alternative scenario, also this short-term long zone, and now this mid to short-term long zone in Bitcoin. If you think this is a great track record, down there in the description there's a link taking you to our website. We have 200 assets on a daily basis, but Bitcoin amongst all of them is one of our strongest markets. So if you think an analysis like this one can benefit you in your own investment decisions, feel free to check out our offer. But either way, please do not miss out on subscribing to this channel and turning on the bell for notifications, because I have also even another scenario for Bitcoin that I prepared for you for another video, because it would just be too much for this video alone. Because there still is this narrative running around that Bitcoin is digital gold. And in some regards, yes, it is. I do believe it is. But then this narrative has implications that are way uglier than many of us are aware of. And I'm going to uncover that in an upcoming video. So stay tuned for that. See you in the next one then. Take care. Bye-bye.